Hey everyone, and welcome. Today, we are going to pull back the curtain on the stock market. But let's just forget everything you've seen in the movies, the frantic traders yelling into phones. We're going to talk about a much smarter, way more powerful approach. How to invest by thinking like a business owner, not like a gambler. So, let's dive right in.
And we're going to start with this really powerful idea from an investing legend, John Bogle. What he's saying here is pretty profound. For most of us, the very act of trying to beat the market, well, it's a setup for failure. But why is that? It really just comes down to a simple misunderstanding of what game you're actually playing.
And this slide kind of shows you the big paradox. See, on one hand, you've got the winner's game. This is the world of actual businesses, companies making things, innovating, growing, and creating real value. Owning a piece of that is designed to be a winning proposition over time. But then there's the loser's game. This is the frenetic, hyperactive trading, trying to outsmart everybody else. And once you factor in all the fees and the costs, the math just starts to work against you. The very effort to win often ensures you lose.
So, this brings us to a really crucial choice that every single investor has to make. It all boils down to your mindset. Are you going to be an owner, or are you going to be a speculator?
The owner, they use something called fundamental analysis. They're focused on the business itself, its health, its products, its future. The speculator, well, they're in a completely different world. They use technical analysis. They're not really looking at the business at all. They're looking for squiggles and patterns on a chart to guess what the price is going to do next.
Yeah, the speculator's world is filled with all this complicated stuff. Stochastic oscillators, candlestick charts. It's all designed to find these little patterns in price movements. But the problem is, this intense focus on short-term prediction, it often leads to emotional decisions, high trading costs, and frankly, it makes it a really tough game to win.
But now, just contrast all that chaos with the owner's focus. It's about simple, common sense questions, the kind of stuff you'd ask before buying a local coffee shop. Is the product any good? Are sales and profits actually growing? Do I trust the people in charge? And am I paying a fair price? All of a sudden, investing feels a whole lot more accessible, doesn't it?
So, how can you actually start thinking like an owner? Well, it's way simpler than it sounds. Let's just walk through a really practical checklist you can use for any potential investment.
First and foremost, you have to ask, what does this company actually do? Forget the three-letter stock symbol for a second. Can you explain in plain English how they make their money? Because if you can't, you don't really understand the business. And an owner would never, ever buy a business they don't understand.
Okay, next up, is the company profitable? An owner is always going to look for a history of growing sales and profits. A business that's constantly losing money isn't really an investment, it's a gamble. A healthy bottom line is a key sign of a healthy company.
Now, let's talk about a key tool for an owner, the P/E ratio. Okay, don't let the jargon intimidate you. It's actually a pretty simple concept. Think of it like comparing two houses for sale. One might have a higher price tag, but if it generates way more in rental income, it could actually be the better value. Well, the P/E ratio does the exact same thing for stocks. It compares the stock price to the company's profits. A lower number can be a hint that you're getting more bang for your buck.
Then, you gotta ask, who is in charge here? You're not just buying a bunch of buildings and patents. You're really betting on the people making the big decisions. Is the leadership team experienced? Are they trustworthy? Do they have a clear plan for the future?
And finally, what is their secret sauce? What makes it really hard for other companies to come in and steal their customers? This is what we call a competitive advantage, or a moat. An owner wants to find a business that can defend its success for a long time.
Now, I know what you might be thinking. This sounds like a lot of homework. And yeah, picking individual stocks can be challenging, but here's the really good news. You don't actually have to do all that to adopt an owner's mindset. There's a much simpler path.
And that brings us to the index fund, specifically an S&P 500 index fund. Seriously, think of this as the ultimate owner's investment. With one single purchase, you become a part owner of 500 of America's biggest, most established businesses. You're not betting on just one company to succeed, you're betting on the long-term growth of the entire economy. It's diversified, it's simple, and it's incredibly low cost.
And getting started is actually refreshingly straightforward. First, you open an investment account. Second, you pick a low-cost S&P 500 fund. Third, you just decide how much you can invest on a regular basis. And believe me, even small amounts really add up over time. And then, the fourth and most important step, set it on autopilot and be patient. You got to focus on the decades, not the date.
So, when you strip away all the noise, all the complexity, all the jargon, what are we really left with? Well, we're left with a simple, incredibly powerful idea that's just grounded in common sense.
If you remember one thing, let it be this. Own the business, don't just rent the stock. See, when you own something, you care about its long-term value. When you just rent it, you're only worried about the short-term price swings. And that one little shift in perspective, it can literally change your entire financial future.
Which brings us to our final question. The world of business is fundamentally designed to create wealth. It is the winner's game. The only question left is, are you prepared to play it? Thanks for joining me.